Hello and welcome back to Coinscrum Markets. I'm thrilled to be joined after a little bit of a break by Anton Golub, CEO at Flovtec. How are you doing?
Pleasure that you have me again, and really exciting times for us. I'm looking forward to another awesome discussion with you.
Yeah, I think the last time you were on, it was coincidental that we were always making all-time highs, over a 6-month period, and it seemed that you were kind of joining us on the day of every new all-time high. We're in a slightly different environment now, Anton. Let's say the market's having a breather, would be the kindest way of putting it. What's your thoughts on the last week or two? Things have kind of been a bit range trading all round, I guess, but on the day of recording today, bottom end of the ranges. What's your thoughts?
Yeah, so I mean, I was very excited, also privileged and happy that I was always joining you on the all-time high, a bit different environment. I think kind of the move that actually happened just recently, they took quite a lot of people and pulled the rug under them, if I can say it like that. What we saw again was quite a lot of liquidations coming from all over the place. And also a few weeks ago, actually quite a few exchanges were down, if I can state it in that direction. What was surprising, kind of that the DeFi protocols held up really well during that correction. And kind of I see that, maybe there's a lot of opportunity, to go down even further. But I want to say again, like from what we see behind the scenes of what's happening, I couldn't be more bullish overall on the whole industry and the price rise as well. And I think from the perspective of the news, we heard recently from kind of people who have more interest to allocate further into crypto, this is actually a great opportunity to buy for somebody who thinks long-term and not maybe within this very short time horizon. So I couldn't be more bullish on the price and on the industry.
Okay, well, we'll come on to some of that kind of the new allocations in a little bit, but on the DeFi market, what have we seen there in terms of, volumes compared to maybe a few months ago and total value locked, etc.?
Yeah, so what we saw actually prior to this correction is actually that a lot of the AUM was leaking from the centralized exchanges and centralized wires towards DeFi. And kind of if you spoke to exchanges, they would tell you that they see that firsthand. And kind of that AUM was building up in protocols and in a lot of them that actually kind of offered either synthetic or wrapped coins, basically enabling you to take on leverage. And kind of we saw a lot of actually AUM or total value locked within these protocols rising quite severely, and then a very sharp correction. And what we saw actually in these discussions that we had with a few people, actually that the leverage that was building up in DeFi was very high, and it still is very, very high actually. Now, the fact that these protocols worked fairly well was quite successful, but I think that, the fact that the AUM drop or the TVL dropped quite a bit following that May correction actually, I think quite a few people got pulled out or liquidated quite easily. And I think if there weren't safety mechanism further among this few of these protocols, for instance, like liquidity, where you actually have certain mechanisms to actually prevent large-scale liquidations, if they actually got liquid, I think the correction would be even steeper. And that's kind of unfortunate in the DeFi world. Actually, then it's kind of like a positive feedback loop. Then basically that pushes pressures on Ethereum, and then pushes pressure a lot on those wrapped synthetic tokens, and then it's just a vicious circle. So we kind of stopped at these levels. Overall, still, Ethereum is outperforming Bitcoin on a relative basis, so that's highly positive. And I think kind of maybe people are still seeing this as a good buying opportunity, what might come very soon from Ethereum, rolling out Ethereum 2.0.
Yeah, and we've seen the gas fees drop right back down. That was an open question with how expensive fees were getting on the network, but I guess people were paying them if it was justified by some of the opportunities they saw in DeFi, as long as I guess they had to be trading reasonably large volumes to justify that. But so we've seen network activity drop back and fees drop back accordingly. We've also seen that on the Bitcoin network. Network activities dropped quite significantly on the Bitcoin network back to 2018 levels, but around 60% drop from recent times. And a lot of people look at that network activity as an indicator on the price as well. So do you have any specific thoughts on that?
Yeah, so just to mention with regards to first referring to DeFi and to Ethereum, I think actually before when the fees were so high, it was economically unreasonable even to do a lot of these transactions, and to actually doing them in any reasonable way, you kind of had, it was behaving kind of like a little bit like an OTC market, that unless you exit really high transactions due to the gas fees, just it made no sense. And we were proactive actually telling the people around us and our clients to really not even focus on AMMs, on decentralized exchanges, because there was just not, it was not economically reasonable. Now, kind of actually, I think when we're talking about Bitcoin and the network activity, I think, dropping it to the levels of 2018 is still actually quite high. if we remember, those were actually the all-time highs prior to this actually run up. Yeah. I think in terms of relative perspective, we're still at a very, very healthy levels. Now, I think a lot of this impact may have been around whole talks. How does Bitcoin mining is impacting our environment, and how green or not green it is actually from that perspective. And there's a lot of now these discussions that are being revolved around that, where maybe we can question that, is there a lot of merit to that? Because from my experience, or at least what I see, is that a lot of this mining activity, especially on Bitcoin, is already done in a really cutting edge environment, and kind of this coal factories that power the Bitcoin miners. This is maybe some in very specific and isolated places in the world that works like that. So maybe kind of these are the things that tie up together with a bit of a price drop, that kind of things maybe are not evolving in the anticipation that we had, but still, I mean, we're at all-time high levels compared to the previous run-up. So I couldn't be more positive. Yeah.
Yeah, I mean, that has been an ongoing and open discussion for many years, and it will roll on, I guess, as new people come into kind of the environment. It's going to naturally raise the same questions. But then, I guess what we have seen, if we look across the kind of leaderboard of tokens, that proof of stake networks seem to have outperformed or be outperforming Bitcoin. Do you think that's sentiment feeding into the markets, and people are sort of hedging their bets and thinking that, maybe proof of stake will be the future?
Yeah. So I think that, so again, this may be my personal opinion. I think kind of the proof of stake networks might have more opportunities going forward, into the fact that actually, it's becoming economically unreasonable, and to the impact of proof of work and how it functions. I think there's like a strong motivation why people want to go in that direction. So I see it from a personal, maybe sentiment perspective. I think that's the driver, and kind of the topical question around the impact of the environment might put people in a further direction. But still, I mean, the most dominant cryptocurrencies, the household name is Bitcoin actually. And I think that's will keep on staying, both from a retail perspective, from an institutional allocation perspective. Bitcoin is still king.
Yeah, but I guess that is another proof of stake versus proof of work, again, has been an open debate for many years now. And there are definitely pros and cons on both sides. So those arguments, I'm sure, will rage on for some time. So we'll come back and look at that again in the future. So just quickly on, you mentioned, more capital allocation coming into the market, potentially MicroStrategy, that has been, I guess, one of the biggest allocators and most vocal allocators over the last year. They'd issued about 1.6 billion of convertible debt over the last year to buy Bitcoin. I think their average price from their May SEC filings was around $25,000. So we're still holding above that. But they announced this week issuing another, originally 400 million, actually up that to 500 million of convertible debt. Good sign, or just, averaging in?
I think it's between both. I think averaging in and buying at the right prices. I think MicroStrategy is becoming like a quasi ETF actually, because I think the holdings that they have actually enable quite a big allocation towards it if people kind of want to have a quasi Bitcoin exposure, since we are not getting an ETF actually anytime soon in US at least. Yeah. So I think this also is highly positive. I think the timing wise, this couldn't be better for them, because they can buy now at cheap prices. And I think also from a price perspective, they can support the price as they buy up and build that allocation, which is quite sizable. What I understood, the 500 million has been allocated in the debt offering. So I think this is going to be a great opportunity for them to buy cheaply, but also for the market to get more confidence that actually big allocations are still coming in. And we'll see that dynamics of cryptos being withdrawn from exchanges, big amounts being withdrawn from exchanges and putting into cold storage quite soon, actually. So we should keep an eye on that. Yeah.
Yeah. Well, I did see something. I think it was like 3 times oversubscribed as well. So I guess that is one of the, that's definitely a positive benchmark in its own right. So we'll let Michael Saylor carry on buying Bitcoin. What else has been in the news this week? Big one's been El Salvador. Congress passed into law that Bitcoin could be used as legal tender. What do we think of this?
So I think the highlight of the Bitcoin conference in Miami was, in fact, actually, that it was, back then it was proposed that the bill will come that will approve Bitcoin as a legal tender. But today we can say actually it was approved. So this is the big news by supermajority. So I think this is, again, a small step in the right direction of an adoption going forward. Now, kind of as maybe an introduction why that happened is actually a company called Stripe launched their application actually in El Salvador, where we really have a lot of unbanked people. A lot of people is still using cash to the tune of the 70% of all transactions or people use still cash. So this was a great kind of a door opener to showing that you can use Bitcoin maybe as a payment or a remittance tool. That was quite successful. I think this is like a very small step towards global adoption. But I'd also, just to now be a bit more realistic, I think that the immediate impact of that will be very small, because the network effects that impact or the result out of that decision are actually quite small, because El Salvador is not a global powerhouse that exports and imports from everywhere. But I think kind of after we heard that news, quite a few other countries, specifically from Latin America, announced that they might be considering the same. So I think we're kind of all moving in that direction, where Bitcoin is becoming more useful, even in a wider context. But I think now talking about Bitcoin as a payment method, I think that's not reasonable. I think it will more be like a store of value. So maybe going forward, it will more sit on the balance sheets of the central banks one day, long time in the future, or on the balance sheets of the countries. And I think maybe that's the way how to use it going forward on a bigger scale.
Yeah, it's interesting how they presented it, and they did kind of, mention that there's a need to build out new financial infrastructure there. I think something like 25% of their population live and work in the US, so the remittance argument is possibly valid. I think there's been concerns over the years that, maybe a bit disingenuous for maybe people in the West pushing Bitcoin as an option on some of these kind of underdeveloped nations because of the volatility. But then often the argument is that, well, the volatility of their local currencies, although El Salvador dominantly uses the US dollar, opens up the question, and that's for the local market to decide. And in terms of building a new financial infrastructure, I guess we saw that in telecoms in Africa, and the whole banking system in Africa, over the last 20 years, they skipped a generation of banking and financial infrastructure. They didn't have physical banks and all that, and they skipped and they jumped to mobile payment networks. So, there is an argument that maybe this is the first foray towards that. The other side of the coin, no pun intended, is always, if we see more of this, what the ramifications will be from countries like the US that maybe see that as a shot across their bow, especially for nations that are primarily using the US dollar as their reserve currency. So, yeah, interesting one to see. We'll see. It seems the Biden administration is taking a bit of a firmer stance on all of this. So let's see how that pans out over the next few weeks. But an interesting development all the same. And let's wrap up with, I guess, another ongoing discussion. Bank of England this week published a discussion paper about stablecoins. Again, raised concerns about crypto in general, and also kind of went a step further. And I know this again has been raised. I remember many years ago going to a small workshop with the Bank of England, and one of the first things they raised around central bank digital currencies was what impact that would have on commercial banks. Because if people had the option to bypass commercial banks, go straight to the central bank, what's that going to do to commercial banks' balance sheets? And they've modelled this now. So I think they modelled a scenario where a fifth of retail customers might move over to a stable coin, and what that would mean to commercial banks. What do we think about this?
Yeah, so to kind of try to explain is, on one side of the coin, now pun intended actually, I think it's great that we're having these discussions in terms of what could be the impact of crypto, digital assets, stable coins on the banking infrastructure. So I'm very positive. Also read the same paper, and I was kind of very excited that they're proactively taking things in that direction and see this as a innovation and technology that can be used within the banking system. Now, on the other side of that coin, I think for me, kind of when I read things between the line, is that the central banks don't want retail to touch stablecoins, to touch money. They want an intermediary in between, and they want a bank in between, commercial bank in between that would hold that. Yeah. So I think when I was, as you mentioned, you have this experience talking with the regulators in a monetary institution. I was at a conference of BIS and Swiss National Bank quite a few years ago, and there it was clearly stated that they see stable coins being used in the wholesale money markets. So that means in those big transactions that happen between the big financial pairs, that's where they see use of the blockchain technology, of the stable coins, but they're really not keen on having my digital pounds or digital Swiss francs in my wallet and not having a bank in between. So I think that's where a lot of concerns come from. I think they will stay. And but now it's for us to prove actually that maybe there are alternative financial system can exist where people can directly hold their money and not have an intermediary or a middleman in between.
Yeah, and I mean, I think it's changed definitely in recent years that anyone, especially exchanges, etc., brokers working within crypto are trying their very, very best to be compliant. And, you know, they do oftentimes set a high benchmark for onboarding, etc. We recently saw, because there's been, you know, talk about having to comply with the travel rule, and we've seen exchanges collaborate to, you know, be able to address that issue, and companies such as Notabene building technology which will allow exchanges to be compliant with the travel rule. So, you know, are we confident that the industry is ahead of the curve and will stay ahead of the curve and be able to prove to regulators that, hey, we can comply, but actually do things better as well, and then make it kind of a hard, you know, a harder issue, or a harder kind of argument for those regulators to pose to the industry.
Absolutely, yes. So I think the bigger we are, the more advanced we are, the more value we add to the whole community, the harder it's going to be ignored to digital asset world, the one that's very flourishing. I mean, I think, you know, we spoke about it also a few months ago. The issuance of the stablecoin is growing every day like crazy. So I think there's really a lot of appetite for that. And it's showing a way how to move things forward. And I'm sure there will be a lot of winners, whether it's USDT or USDC or some other stable coins, there will be going to be a lot of winners in this space. I'm absolutely sure of that.
Yeah, but I guess, you know, let's see how it pans out. We discussed this recently, that there seems to be a gentle tightening of the regulatory noose. And, you know, given how critical stable coins have become within the whole broader ecosystem on centralized exchange trading, on DeFi, it's definitely one that we need to keep an eye on, because if there's any sort of drastic and fast moves, it could, I guess, have an impact on the overall market. As always, time will tell. We sit and we wait, and these things will pan out. Anton, as always, it's been a pleasure to have you on the show, to hear your thoughts, and we will have you back on in a month or so. Thanks for joining.
Thanks a lot, Paul. It was a pleasure, and hopefully either we meet again at the next all-time high, but if not, then happy buying to everyone and stay liquid. Yeah.
Thanks very much.
Awesome. Cool.